Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Time for Trading Nation. The Bears taking a bite out of Beyond Meat today. The shares fall over 1%, dipping below $100 in the process. Earlier this session, the stock now about 55% off its July highs as the fake meat maker gears up for its Monday earnings report. Joined now by JC O'Hara of MKM Partners and Boris Schlossberg of BK Asset Management. JC, I'll start with you. We have this stock back down to about $100. That's the level from which it really accelerated higher back in June. Is there any significance to the $100 mark?
Well, not yet. I think the ultimate support is a tad lower. But if we go back and look at the price action, to see the history of this chart, this first start in July, we saw a parabolic rise. The stock went from, 25 to 240, ran out of buyers at, 240. And you start to see some profit taking slowly occur. And that profit taking was relatively, calm. But that really started to accelerate a few weeks ago. And no coincidence, it started to accelerate as Beyond Meat broke technical support at 140. Right, that is where a level where over the last few months, buyers have historically shown up and supported the stock. Buyers failed to show up this time. As they failed to show up, selling started to accelerate. You broke below the gap higher from June. It entered an air pocket. So I really think the distribution will continue. I'm looking for $85. That is where I think the next support level should start to pick up.
All right, and Boris, so right now the company has about a $6 billion market value. At the peak, it was close to $15 billion. I guess it all depends on what you think the size of the ultimate opportunity here is for this business and whether it can capitalize on it.
Yeah, I don't think anybody's feeling more gleeful than the rock-ribbed, red-blooded carnivores at this point because it's almost a round trip on the short. And besides the overvaluation argument, the argument of the shorts basically is that Beyond Meat and Impossible are all essentially kind of genetically modified foods and therefore really not that great for you. But that completely misses the point that the meat supply in this country is fully antibiotic-laden, hormone-infused, and is also very dangerous. So to me, the argument isn't going to be about chemistry. It's really going to be about taste. And the bottom line is that Beyond and Impossible have been the first real, true replicators of the taste of meat. And the value here is really from the producer's point of view, because both alternative meat products are much easier to manage from a point of view of spoilage. This is why White Castle loves it. This is why Dunkin' loves it. And if the consumer really takes to the products, the opportunity here is probably about 13% of the market. That's the forecast of how much it could take over the market. In which case, whatever dip you see in Beyond Meat, long-term is probably very much a buy. Now, if you don't like the volatility in the stock, I think you should maybe do a long-term substitution with like a long-term leap option to see if you can participate in the trade. But I think fundamentally, from a very, very long-term perspective, it's just starting out. I think this is going to be the story to come, as this is going to be very much part of the consumer diet going forward.
Yeah, I was going to say there's been a lot of excitement about trying it. We'll see if those sales pick up in a more enduring way. JC, Boris, thanks a lot for joining us today. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation.
During bull markets, many traders find themselves attracted to small cap stocks because they have a tendency to have a higher beta, meaning they generally move up faster than the broader market. But don't overdo it on the small caps because they're also more vulnerable to pullbacks. I'm Joanna Payne, and Schwab is the better place for traders.